Namaste, welcome to Arthaniti. Today I want to decode a very peculiar news item which I recently read. Now this news pertains to the Paytm board approval of buyback of shares. Now if you remember, Paytm came up with an IPO just a year back. Okay, the IPO was launched on 8th of November 2021 at 2150 rupees per share. It was a 18,300 crore IPO and the shares got listed on the 18th of November. From the day the shares have got listed, the shares are in a free fall, eroding more than 75% of investor value. Okay, now today the stock is trading somewhere around 540 levels. So if an investor who has invested in the IPO, put in 2150 rupees per share, today the share value stood somewhere around 540 rupees. Now imagine the kind of loss the investors have suffered in a matter of 1 year. Now in all this turmoil, it is said that though it was one of the biggest IPOs to hit the Indian stock market, it is one of the biggest failures in terms of IPO valuations also, right? So erosion of this kind of wealth of investors in a short period of time has put shock waves through the investors, and many investors have had become wary of investing in startup companies, correct? And in all this turmoil, the news of Paytm coming up with a buyback offer of its shares was a shocker. Why? Because see, it defies logic. Now, why do companies raise capital in the first place? Well, the idea of coming out with an IPO is to raise money to meet its say expansion plans or strategic moves, strategic decisions that the company intends to take to increase the scope of its business operations, so on and so forth, correct? It is a way to infuse more capital into the business. Now when general public, people like you and me, invest their hard earned money in companies, the view is to gain profitability over a period of time, be it by way of capital appreciation and by way of regular returns, that is the dividends that the company pays out, correct? Such erosion is hardly ever seen. And in all this, the company has now approved, the board of Paytm has now approved a share buyback of around 850 crore rupees. So where the initial issue was around 18,300 crores, it has approved a buyback of 850 crore rupees, and the buyback price that is set is 810 rupees per share. Okay, where the share today is trading at around 535, 540 levels, the company has decided to buy back shares at 810 rupees per share. Now imagine you have invested at 2150 levels and today you are going to get back 810 rupees per share. It is still a straight cut of around 62%. Correct? Now, first of all, after I read this news, I thought of decoding why the company in the first place decides, not only Paytm, by any company decides to come up with a buyback plan. Now there are various reasons to do so. First is consolidation of capital, in the sense the rights to or the company ownership remains consolidated, or consolidation is one of the reasons why buyback is offered. One more reason is reducing the cost of capital, in the sense, see, if lesser number of shareholders or lesser number of shares are available with the public, the kind of returns or the costs involved, in the sense the dividend that has to be paid, also gets reduced. The next thing is preserving stock prices, which can be one of the reasons that Paytm has come up with IPO with share buyback. Now, all of us know that Paytm share prices have been in a free fall ever since they were listed on 18th November 2021. To lock that free fall and to boost the prices to some extent by like coming up with an IPO buyback offer in the open market, they are going to buy it from the secondary market. The share buyback is going to happen in the secondary market. So it is one of the way to lock the free fall that has been happening in the share valuations. And if the company feels, if the board feels that the share is getting undervalued, in the sense even though there is potential of growth in the company, say pessimism amongst the investors, amongst the shareholders is making them sell the shares. Maybe that is also one of the reasons why a share buyback is decided and approved by a board of a company. Now, in case of Paytm, there are some things that I want to tell you. What has happened is Paytm has categorically stated, which they cannot do by law, that the IPO money that was collected is not going to be used for this buyback. Ideally, then it would have been the safest way to raise money, correct? You raise money at 2150 levels, and at the time of paying back, yeah, you pay not even half, you pay just 810 rupees. So you get money at 2150 and you pay back only 810 rupees out of it. So is this even possible, right? If you take a loan from a bank, yeah, you have to pay the whole amount plus some interest on it. And here what Paytm is doing is it raised money at 2150 and it is not even returning half of the money back. Easiest way to raise money, right? But Paytm has categorically stated that they are not using the IPO proceeds for the payback. They are going to fund this payback, which will have a outflow of funds from the company to the tune of around 1050 crores. So this 1050 crores that they are going to use for the share buyback, they will be using from the liquidity that the company has from the time before the IPO. That is what the company management has specifically stated. Now, if you see the liquidity of the company, Paytm is sitting on a cash pile of nearly 9,000, I'll tell you the exact figure, I've written it down, nearly 9,100 crore rupees. So, what they are saying is in a way not wrong. The company is liquid, it has ample amounts of cash with it, and as per the management's what do we say, statements, this cash is going to be used to repay the shareholders. But some of the analysts have pointed out that the people who have invested, the retail investors like you and me who have invested through the IPO at 2150 levels are going to get returns which are not even, which will not even give them back the whole amount that they have invested. But people who had invested in the company before the IPO, in the sense VCs, yeah, venture capitalists, angel investors who have invested in the company from before the IPO are going to be rewarded handsomely. They are going to get returns more than 1,000 times their investments. So in a way, analysts are raising concerns, analysts are raising red flag about this particular transaction that Paytm is about to undertake. Correct? Now, tell me which investor would want to lose money? Well, I, for one, certainly will not like to lose my money, which I have worked so hard to earn. I will always like my money to rise. Correct? But if you see the startup IPOs that came into the market in 2021, there were so many of them, and there was a lot of buzz created around it, or maybe people the kind of valuations that were seen in those IPOs certainly raises questions and a learning for investors to invest in startup companies or invest in IPOs in general henceforth, correct? Because if you are going to erode that much of your wealth in 1 year, yes, your target of wealth accumulation at this rate will never be accomplished, correct? And this particular Paytm IPO buyback certainly raises a lot of questions about how funding is achieved or how funding is targeted by companies, and like at the cost of retail investors, how investors who have invested before the IPO are going to profit so many times their investments, correct? So to end this video, I would like to reiterate that in case you are a retail investor and you plan to invest in an IPO, there are certain tick marks that you need to do before you decide upon putting your money in any investments. Now, the first thing is, don't ignore valuations, correct? Now most of the times what happens is you will succeed in your investments and you will see the returns, good returns from your investments, if you enter a particular share at correct valuations, correct? And you need not buy all the shares at IPO. You can buy the shares once they are listed on the stock exchanges in the secondary market as well. But correct valuation is a key to success in investing. What are the prospects of the company? Does the company like always have a long-term viewpoint? Don't just invest to make profit at the time of listing, correct? So otherwise, if you are an investor in Paytm, you know that the share got listed below the IPO price and has never reached the IPO price, correct? So don't just invest in an IPO with the view to make windfall gains once the share is listed on the stock exchange. Always have a long term view of your investment. Where do you see the company 10 years down the line? Why am I saying this? Because equity investments are risky and you need to have that long view in mind when you invest in equity markets, correct? The next thing that I want to tell you is, do your own research. Do not fall prey to social media influencers or news articles or television news also for that matter, who subtly promote a particular IPO, correct? Do not fall prey to that. Do your own research, because after all it is your own money, correct? If you lose it, these people are not going to make good the loss that you have suffered, correct? So look at the management of the company, check out for the profitability history of the company, the people involved in running the business, the kind of scope the company has. Do some industry research, do all this basic, learn about this, spend some time, and then if you think that it is worthwhile to put in your hard-earned money, only then go and invest in an IPO. Don't go on hearsay. Do not believe a company is or an investment will give you or will make you crorepati just because your friends are investing in it, correct? So don't do that. Do your own research, and only if you are comfortable, then think of investing your money. Plan well in the sense, study the data, study the facts, understand the facts. If you do not understand, there are various other avenues where you can put in your money which you understand well. So understanding where your money is going to be utilized, what is going to happen to your money, is very, very essential. And don't just go by the big names. Like in the case of Paytm, yeah, it had like all global investors backing it. Alibaba, Jack Ma famed Alibaba was is one of the investors. Warren Buffett is one of the investors in Paytm. Does not mean that if you put in your money, these people are going to look after your investments. Yeah, so just don't go behind big names. As I said, do your own research. Understand where you are putting your money, what is going to happen to your money, and then take a decision. Correct? What has happened with Paytm and this kind of buyback that Paytm has happened, I don't want to comment anything negatively about it. Why? Because the board has approved it. There is nothing illegal as such into what they are doing, but investors are going to lose if they had invested at the time of IPO and still remain invested uh, at the time of buyback. Correct? Now, not all the shares are going to be bought back. Around 1.25% of the listed shares Paytm is going to buy back. Now, if you do not want to continue with your investment in the Paytm shares, then this is the time for you to exit the company. Why? Because you are getting a premium of around 45% over the listed price, which is around 530 to 35 levels. You are getting almost a 50% premium on the price that at which the shares are listed in the market. Correct? If you would have sold the shares in the market today, you would have got only 530 rupees, but instead of that, you are getting at least 810 rupees back. So if you want to exit this investment with the and stop further erosion of your invested amount, then you can think of opting for this IPO. I'm sorry, opting for this share buyback. But next time when you invest in an IPO, please do your homework, please do groundwork, and then decide, so that you don't have to face such problems in your other investments. So that's it for now. Any queries you have, again comment below the video. I will be happy to help you, and see you tomorrow in my next video. Stay safe till then. Goodbye.